Never turn back on.
Okay. Are we ready?
Yep.
All right.
Yep, good to go.
Perfect. Welcome everybody via Zoom. I was saying to Keith, we feel like COVID again, but when we come back for our board meeting, our conference room where we have our meetings, should be beautiful and our sound should be phenomenal. So welcome everybody via Zoom. We're having a flashback, but to our Finance Committee meeting. If we could begin by rising for the Pledge of Allegiance. I pledge allegiance.
Pledge allegiance to the flag of the United
United
States
States,
to the
republic for which it stands, one nation, our God, indivisible, liberty and justice for all.
I got,
All right, thank you so much.
got delayed in the echo. I'm sorry.
That's okay. It's going to happen. So we're going to go to our fabulous Patricia, who's going to do our roll call.
Okay, Rebecca Bear,
I am present.
George Andrews,
Present.
Keith Carcutt,
Present.
Rich Lamus,
Present.
or present.
Perfect. Let me just get up the agenda here. I'm splitting my screens. Bear with me. All right. We're going to begin with a motion to approve the agenda with members of the committee reserving the right to add items to the agenda if desired. Do I have a motion?
Second.
Perfect. All in favor?
Aye.
Thank you. Next up, we have a motion to approve our minutes from December 9th.
Motion.
So moved.
All in favor?
Aye.
Fabulous. All right. Our first item on the agenda, we have a couple of things here, which is our school business consultants. And we're going to also have our audit process, our annual financial report. And we're also going to hear from our auditors who did our annual audit. So I will pass it on over to you.
Not our auditors, our school business consultants who did our.
Gotcha. That's right. They're coming. The auditors are coming to the full board meeting.
Correct. Yep.
Gotcha.
All
right.
Jim should have been on. Is he waiting to
Yep.
get?
Yep.
Oh, okay.
Hey, good evening, everybody. Yes, so we are here to bridge the gap between AFR and the work that has been done, through the past few months to get you to the audit report presentation, which will come from your independent auditors next board meeting. Okay, so just an update, school business consultants, we were engaged, I think, I believe it was late summer, early fall. We've been working closely with your team. In particular, the last few months have been focused on, closing accounting entries, adjustings, creating reports, working with the auditors, working with your staff to close out the year and, generate your annual financial report, as well as get the auditors everything that they needed along the way. So the other things we've been working on are kind of like, we have a lot of people in a lot of different positions now, right? So people assuming new roles. So we've been doing a lot of advising and training in these positions. So, a lot of, like, particularly with the AFR, there's a lot of different schedules and back schedules that had to be done. So working with your team, particularly Matt and Ann, on that. And also, Joe will tell you in a second, there was a major overhaul by the state to your accounting system in the requirements there. So Joe will talk about that in a second. But I did want to express sincere appreciation to your team. Matt and Ann and the business office staff have been incredible through this. Matt, I don't know if you're on the call, if you want to say anything about how your team kind of helped us work through this AFR and audit.
Sure. I think this year there was a lot of transition, obviously, in the business office. So we're grateful for Jim and Joe's support and Dr. Vitale's. But we also just want to say thank you to our staff in the business office and our food service staff in the administration building. Our bookkeepers, Jeannie, Sonia, Tajmir, and Pam. Our payroll clerks, Daisy, Tabitha, and Paige, and our accounts payable team, John, Lauren, who's new, and Anne-Marie, who retired. As well as our food services team at Central, Melissa, our director of food services, and Jen. They were key, working with the auditors nonstop to get everything together over the summer. That's the big project over the summer. And then once the auditors are on site in September, just getting them information they need as they're here and following up on requests continuously. So thank you to all of them for all their work.
And just kind of as an outside set of eyes coming in, we were really impressed with the responsiveness of your team. Like everything that we asked for, I mean, they were jumping on it, and it was a real pleasure to work through what was a very challenging AFR audit cycle. So really thanks to your team and administration. Everybody was great to work with, and we did get your AFR filed on time. It was good. But Joe, there was a major project here, and I think it lands us in a better spot. So if Joe can just kind of talk through the PDE's kind of chart of account requirements, I think that'll help talk about budgeting and auditing kind of wrapped in one.
Sure. So this year, being 24-25, PDE had new requirements for each school building. You had a report based on a building code, right? So all the expenses related to a high school had to be high school, specific elementary building, so on and so forth. When we start to look at the account code structure, some were budgeted by building and expensed by building, but others were not. So what that means is we had to break out if we have, multiple elementaries and multiple high schools, you have to specifically identify by building the salary and code them properly. If they go to East Stroudsburg North, they got to be coded to building North, right? So the data was all in the system. And what we recommended was we meet as a team, right? This isn't just our idea. So we met collaboratively and came up with ideas of, okay, how could we capture that data and still keep it the way in your accounting system, the way that you accounted for it, but get it to be fit in PDE's format by building code. So there were some extensions in the building code that we added to the end that saved the information how you previously recorded it, but it allowed us to update it and get it submitted to them. The issue that we looked at when we first ran it, there may have been 800 errors, and that could be small to say that. There actually may have been more when we started. So there were that many accounts that we had to change and modify. But as a team with Jeannie, so on, everybody was in this room and we came up with ideas and we were able to do that. With that being said, that was the biggest part. And in order to even start the AFR, you have to have that right so that you can upload it. So we did come up with ways to do that. And moving forward, we have a plan where everything will be coded by building. Okay. So because that being the first year, we figured out the kinks to get 24-25 in, and moving forward, we have a plan now so that doesn't become an issue moving forward. It's rectified. So the business office staff is still working through that, and it'll be good for 25-26.
And so from a compliance standpoint, that was, the job, but as a benefit standpoint, as a board member, I'm now aware that now all of our staff, all of our supplies, different items are being tracked out to building levels, right? So we have a higher level of detail at our disposal. Huge project to get there. But I think the consequence and benefit of this is that you'll have a much better, more compliant, but also more useful tracking of expense by building, right? So we ask these, when you have 3 years of this data, 3 years from now, you can look back and say, what did we spend at this elementary school versus that, or what north versus south, and you'll make those comparisons and you'll be much more informed at a building level. So it is useful. So this major project was just not born out of compliance. So you'll be in a better spot when we're talking about tracking. And I'll talk about that when we talk about variances here on your budget. But does anyone have any questions about the process that we undertook to work with your team to get the AFR and audit complete before we move into kind of the next piece?
So it's similar to the past, but it's more, we just had to break it down more this year, if I'm hearing you correctly.
Specifically by building.
Mm-hmm.
Which I'm glad we did, because that's questions we've always had in the past. How much is this building spending versus this building? Are we equitable in our spending? So I'm excited that PDE is letting us do that. So
so they're actually mandating it now. So it is a consequence that boards, I think, largely enjoy that kind of tracking.
So we can keep each school by budget now? Each school will have its own budget, so we can track each school to make sure they're on budget for every item? Is that what with the way you break it down now?
Generally, that's what we're talking about. Now, there are district costs, like your bonds, and like there are things that can't be attributable to a building. Certain maintenance costs are just, transportation costs. There are a lot of costs that remain district-wide, but there is a high percentage of costs that will now be tracked by building. And I think staffing is the biggest one, right? Because 75 to 80% of your budget is staffing. So that's the big one. Supplies, you can track those by building, things like that. But it is a big move. But we did want to call it out because we do believe that over time the reporting you will get back when questions come up, particularly when we have to do like Title I comparability stuff, if that's relevant. It's not, but at this particular district. But if it comes up, if there's a federal report that comes up, it does become a lot easier. You're not doing allocations every time because the costs are really out to the buildings now, right?
And it allows us to, sorry, Jim, it allows us to run reports in your system, budget to actual. So if we want to look at East Stroudsburg Elementary, that has its own building code, we could pull up the data and we can look at that. So it'll allow us to do that. Specifically, like Jim said, it's important to have salaries and benefits accurate. I mean, that's majority of our budget. To get those in by building is going to be really nice to have.
Mm-hmm. And I want to be clear, your budget, your accounting system has been accurate, right?
Oh, yeah, yes.
We're just talking about drilling down at a lower level. And Joe mentioned this before, but like we found no anomalies in your accounting system. It just, there was a new compliance. We decided to leverage it and really think about this, how we want to, how can this benefit us in the future and how can we budget and account for it better? And, I think we're ending up in a good place and Matt and his team are doing a great job with it. We even had Matt on that discussion.
Well, I have a question about can you speak to the audit letter that was presented by the auditors? There was, we, in our packet there, have a letter from, I don't know how to say the name.
Zelensky
Axelrod.
Axelrod, just say Axelrod.
Axelrod, that sounds great. They identified some risks in their audit review letter. Is there something that we should be looking at specifically with this?
Not that.
If I have that letter.
Yeah, can you pull that up?
Is it in their financials?
It attaches an attachment on the agenda.
But they gave us a nice clean bill of health.
Yeah, because when
I
I
don't know if
look
that's
at
what they're saying.
because we qualified as a low risk, there was no internal control issues, there was no findings.
What
So I'm trying
paragraph are
to
you
see.
referring to, Rich?
On the first page, it's towards the bottom. It says significant risks identified. We have identified the following significant risks. And
Are you, what page it's on the audit report, page what?
it's on the audit letter, December 19th, 2025.
On the bottom, there's page numbers.
There's a supplemental letter, Joe and Jim.
Oh, okay. The management rep letter.
Yeah.
Yeah.
It just says at the bottom, significant risk identified. We have identified the following significant risks: management override of controls and improper revenue recognition due to error.
Okay. I could explain that. So that is not specific to your district. Zelensky Axelrod, I had this conversation with them. They do a couple of our schools. So in their audit letter, they identify significant risks themselves in these areas that they tend to look more at. This is not specific to a school district. Okay. So you could actually have that. I tailored that language at another district because of this reason. Because Rich, it's a great question, right? When you read it, it looks specific to your district. It is not. It is a standard template that they use but it is not specific to your district at all. I had this same thing at another district, and it's
I
and
don't
it's in
like
the
that.
rep letters. We could get that because this is a draft. We could actually have them modify that if you want. And I have the language that they did at another district for us.
Yeah, because it
I know where you're
contradicts,
talking about. It
it
does.
contradicts their statements. And
It does.
if a person was reading that, I think it would confuse them, being like, well, wait a minute, you're saying they're compliant, but yet you're saying there's management issues. And
That
that's
is
going to be
correct.
fuel on a fire that we don't want. If it's
And
not the
that
case, if it is the case, then put it. But if
it
it's
is
not,
not
then I don't
I
want it.
could tell you it is not the case here. This is a blanket letter that they use. We've already had, it's funny that when you ask that question, this is the same firm that has it in another, it's just their standard template. The biggest piece and the most important piece for you guys is on your financials. When you go to the back, like the last couple of pages, right? They have an unmodified opinion, which is the highest opinion that they can give. So it means that your financials are right where they should be. Everything is all good. And the biggest thing is that they have no material weaknesses, no significant deficiencies reported, all that stuff. There's no audit findings. That is the most important piece. So if there was anything, it would be on those back pages. But that blanket paragraph, we could have them modify that. And as a matter of fact, I'll reach out to them again tomorrow.
And I'm only asking that because I don't remember seeing that document. So I don't that's where I would have typically gone to
Yes.
review that. Yeah.
Yeah. So in the audit report, their actual audit report, in
Page
the last
65.
couple pages, like when you get back to like page 70,
Mhm.
that's where you'll
Yeah.
get some information.
Okay.
Yeah,
Thank you.
everything.
Page 70 is probably the most important, right? That you want to look at. That's where I would go to first before I read anything to make sure unmodified opinion, which is the greatest opinion that you can get. And then is there any weaknesses, deficiencies, all that. So right on there, you could clearly see that none of that is reported for East Stroudsburg.
Understood. Thank you. I see it. There.
Yeah, and even the last part says we're low risk, right? So that's
Right. Right. Perfect. Thank you.
yeah, no problem. I'm glad you brought that up.
Any other questions on AFR or audit? We're trying to parse this into sections. So particularly, I don't want to confuse this next section with audit. I want to talk about budget to actual in this next.
What's AFR?
This is the annual financial report.
And AFR.
AFR, yep.
Okay, yeah.
We'll just give you so the audited financial statements is what Zelensky prepares. Okay. The AFR is what we file to PDE based on the information should match, and it does, but that's what it is. So the AFR goes to the state of Pennsylvania. Your audited financials are done by Zelensky.
Does Axelrod do both of them? Or
No, they do.
Or you do
No,
the
okay,
Yeah.
so they do the.
We do
audit.
the AFR.
Axelrod does the audit and you do the other financial, okay.
Yep, AFR. They do contain a lot of the same information when it comes to, the financials. The audit report has a lot more notes to the financials and a lot more context. But the AFR is the prescribed Department of Education format that every school must
Yeah.
submit to the state. Now, you must also have an audit report done. But yes, that would be an internal document that management is responsible for, or consultant help obviously is allowable here. But yes, we worked collaboratively with your team to make sure that this AFR was filed properly. And they should match, as Joe said. Any other questions on AFR or audit? Okay. So the last time we talked to you about the 24-25 budget, we being Joe and I, it was in the context of kind of a forecast as to where we thought you would end the year. And there were questions about how we were performing, right? And a lot of what I'm going to explain now are budgetary variances, right? And a lot of the things are the items that we have called out, way back in, I think was it October? But this is a budget versus actual, not budget versus projection. This is what you budgeted back in June of 2024 versus how you ended at June 30th of 2025. Okay. So we're talking budget versus actual. And then I provided a handout. I'm not sure, did that get passed along yet? The handout?
Let me go make copies for this. Matt, do you want to email it to Rich and Rebecca?
Yes.
So I'll talk through at a very high level to start. So in 24-25, we had revenues of $186 million budgeted. We had expenditures of $203 million budgeted. So we started with about a $17.4 million deficit. Okay. Now, if you look at your audit report or the AFR, you would see that we actually had $202.2 million in revenues and $212.5 million in expenditures. Okay. So we went over on both revenues and expenditures, but we ended up with a deficit of 10.3 million. So we actually realized a loss in 24-25 of 10,279,584. And you can find that on your audit report. So that was a realized loss. So we went from a budgetary deficit of $17.4 million to a budget deficit of $10.3 million. Okay.
How did we go over? And what are expenditures?
Well-
What did we?
Great questions. I'll run through that.
But we went under, right?
No.
You were both over on revenues and expenses, but here's the caveat. I want to call out two major items. Okay. The first is buses. Okay. Buses of, I'm trying to find about $6 million in buses, just under $6 million of buses were purchased. Okay. So that pushed your expense number up by $6 million. So that's not really an operational thing, but it is included because of how we have to account for it. On the other side of it, we borrowed the same amount, $6 million. So the revenue side got inflated by $6 million, just by virtue of how we have to account for these things. Okay. So your numbers pushed up on both sides, balanced out, right? So that pushes the numbers over. The other item was we had a $4.45 million construction project. Actually, I think it was two construction projects, which was not budgeted for. However, it was paid for out of ESSER funds, which was budgeted for. Okay. So there's a one-time expense and a one-time revenue. Now the revenue was already included in your budget. The expense was not. Okay. So now we can see that the 4.45 million in expense plus the 5.8 million for the buses quickly shows you how you overexpended the expense side of the equation. Does that make sense? I don't want to belabor the point, but that's how you were.
So they were washes.
They were washes. Yes. But you do have to be transparent and say that, your budget shows that you were over budget on the expense side.
We didn't budget for the buses? I thought we did.
On the general fund, it was not recorded as a budget line item.
Oh.
We did not budget for the buses, and the CFO made an executive decision, well, I guess, and asked the board, instead of buying 1 year of buses, he bought two to save money into the 25-26. So that's why it was $5.8 million. It was so significant because it took our 2 years of our replacement cycle and put it into one.
Gotcha. Thank you for clarifying.
Yes. So now, if we take that 4.5 million and that $5.8 million, right? So a total of, let's do some quick, right around 13, right? I'm sorry, where am I at? Yeah, right around 13 million. And we deduct that from the expenditure total, we actually come in under budget on the expense side. Okay. So if you net that out, you actually were in a good operating position as it comes to budget versus actual. Now, obviously, you have a little bit of a structural deficit, though, that on an operating basis we did lose money. So I don't want to diffuse that because there's a very real loss that occurred here, of right. So, but let me walk you through still how we got to, because those are operating washes there, right? So let's walk through some of the major variances that got us to this point. Okay. Tuition to charter and cyber charter schools were $1.6 million over budget. Now, you may recall we redid the form for you, the PDE 363, which saved $1.5 million because there was an error on that form. However, we still, even with that 1.5 million in savings, we still were 1.6 over budget, right? So how did we address that in the next year's budget? We used a more precise, what we think, calculation for the current year. And we worked with your administration team to get more current enrollment numbers and did the math there. So we don't see this as a big concern in the current year. We think our budget is much more accurate. All right.
But that will always be a variable based on the number of students that go to the charter. We're not gonna know that until the beginning of the year, not
Correct.
when we do the budget, so.
It'll
You're
always be
exactly
there.
right. Yep.
It's just as
Exactly
getting
right.
closer is what you're saying.
Yes.
Yep. So it's management's
Yeah,
best
yeah.
estimate. So we did our best to sharpen our pencil on that and get you closer to where we think that you'll end up. So now we look at special ed tuition. These are, places like News Story and private placements. That was 1.2 million over budget. Now, that honestly is very challenging to control that line item in the budget. We are seeing this particular line item being overspent at just about every school, if not every school that we work with. It is just very hard. The costs at these centers are just skyrocketing, and the enrollment numbers also are. So that's a challenge. VOTEC tuition came in 800,000 under budget there. So that was a favorable one. Interest paid on bonds and loans, 400,000 under budget. And your contingency of $1 million was unspent. So that was $1 million favorable variance on the expense side. So those are the major variances on the expense side of your budget for 24-25. Does anyone have questions there? I do want to point out a very accurate estimate, though, that you had in your budget. And we did call this out when we were meeting with you early on. And that revolves around your biggest expense, salaries and benefits. So salaries budgeted in 24-25, $86.1 million. Actual salaries, $86.1 million. So you were at 99.9% of budget. Okay. Now, obviously people come in, they leave, but like you also have to manage your salaries and your positions and, so there's good management there, good estimates there. That is something really that you should have confidence in your salaries, like as they're getting budgeted going forward, because Matt and his team have this pretty dialed in, right? So when somebody comes to you with a salary and a benefit number, it's a real person with the real salary that's really on your contract and the real benefit cost. And it's a good number. So when we're talking about budget going forward, I have a high degree of confidence in what's in that number.
And that's huge to have because that makes up majority of your budget, right? Salaries and benefits are easily over 70%.
Yeah. So that's some really good news, I think. And that's one perk of really leaning into the system. And I think your team has really bought into using the CSIU FIS system. Now I want to now talk about revenue variances in the 24-25 budget. And I apologize for being so specific, but I just want to chunk this out so that we can kind of stick with each individual conversation. So current real estate taxes in your budget came in 400,000 under budget. Okay. So that's a negative variance. And we think that has a little bit to do with the rebates that like some of the losses that we had on some real estate tax appeals. So that was a pretty major driver of that negative variance. The delinquent real estate taxes, I think Joe took a deeper dive into this one, and we had a $1.7 million negative variance in your delinquent real estate taxes. And that's a problematic, and we had a slide on this. And Joe, do you remember how we corrected that?
Yeah, so what we took at going forward, what we looked at was we always take a 3-year historic average and a look back, and we trued that up because it seemed like we were using a budget number from like 4 or 5 years ago. And although that number has consistently gone up, we kept it low. So actually we're lowballing on the revenue. And at some point it's okay to be conservative, but 1.7 million is just too much because you're trying to get this budget as accurate as possible, right? So we kind of moving forward have trued that back up to where we believe is a reasonable budgetary number based on what we've received over the last 3 years. So we kind of broke that down.
Yeah, so that was a big miss on the budget, but I think we've addressed that one going forward, and we'll keep monitoring the trend with the team. Interest on investments was really a big bright spot, $2 million more than budget. And I mean, it's a factor of, favorable rates, but also the way that your team has been, funneling the money to Pliget or Pislaf and then pulling it when they need it instead of pushing it when you have it. So you're getting it like first dollar in. So you're very efficient on how you invest your funds, and that attributed, in addition to favorable rates and higher balances, that contributed to this very positive $2 million favorable variance. Do I see that repeating? No. PDE held the money on us for quite some time. Rates have fallen since then. I mean, still you're using the same efficient procedures, but it's a bit of an uphill battle this year with the state funds not flowing in till December, January. I think it was December, sorry. And then, but that was held up, so your cash balance wasn't as high as it was in the prior year. Plus, we had the loss, which means we have less cash available to earn income on. Okay. Rental and sinking fund reimbursements. This is the big one here, and I really want to focus on this. $5.2 million more than budget. All right. Great news for the 24-25 fiscal year. However, is one time because this money was just not claimed for however many prior years, and it was claimed in this current year. So we did receive the money, we're caught up, but in the future, that 5.2 is not going to be there, right? So that helped us out in the current year. But when you're thinking about losing that 10 point, overall, your $10.3 million loss, you have to think about what if this 5.2 million didn't come in, would have been a much higher number, right? So just kind of think about that from a structural basis. I'm trying to call out which items are washes and which ones are structural. And this is a structural one.
What, can I ask a question? This is my first time on budget and finance. What are the rental and seating fund reimbursements?
Thank you for the question. I should have mentioned that. So PDE used to have a program called PlanCon, and what PlanCon is they would participate in a piece of your debt service, and they would reimburse you. Fortunately, you have some bonds that are outstanding that still get reimbursed a portion back to you. So now they're not accepting new projects into the program, but you have some grandfathered debt that they still participate in the debt service and
Okay.
refund you. Um, so that will continue to diminish over time as you pay your bonds off. But you certainly will not see 5.2 million or anywhere near it in any year going forward. So just want to call that out as a word of caution there. And then the basic ed funding came in $2.5 million under budget. And I don't know that that was a terrible estimate, because at the time of budget, we were talking about all this extra money coming in. And then I think they ended up funneling it into the Ready to Learn block grant instead. But that 2.5 million never came because they put 5.5 million into a tax equity supplement, which you couldn't use in 24-25. You're using it this year, right? So that's where that kind of negative comes from there. So those are the major revenue variances on the budget. So are you kind of seeing how this reconciles down to say, here are the big chunks of the budget where there were kind of some variances that caused us to go, well, I guess favorably, from a $17 million to a $10 million loss, right? So we moved in the right direction, but it's still a pretty considerable loss, and some work to do on the structural deficit. Any questions?
I was gonna say, so it sounds like the buses cost us a little bit of issue. I know we had the offset, but so that the extra expense there, because now we're gonna have the interest on the loans next year, correct?
Yes. So the capital piece and the debt piece in this year did wash, yes. But you are correct. You will have to pay that loan back, and that will be an expense every year.
Yeah, we didn't have this year. We'll have it next year.
Correct. And then if you'll recall, and I don't want to keep mixing fiscal years, but we did work with your team to help refinance those bonds
Correct.
to save several million each year going forward. So you did create some cash flow in the current year and the next, I believe, 3 fiscal years.
Okay. And then my other question was, we are also, we increased this year's 25-26, if I'm not mistaken, what our estimates were for charter as well. We were underestimating in the past.
Oh, okay. Let me, if you'll just give me 1 second.
And
I
then
will
one other
pull that up.
question, if you want, you can look at that one too. The
Mhm.
other thing I noticed, I've heard in conversations that we did not do in the past, is we weren't budgeting enough for our health insurance fund that we are in, for everybody else. So 25-26, that had to be increased also, where in 24-25, it was not increased, if I'm not mistaken.
So here's what I'll say about that. We did have sufficient monies budgeted in 24-25.
Okay.
What we weren't doing, and Matt, correct me if I'm wrong, is we weren't paying the amount as we go that the trust wanted us to pay. Matt, would you say that's fair?
For the retiree portion, we weren't contributing what we should have been for them. So once we caught up with that at the end of the year, we were more on pace. Just claim expenses were high last year and continue to be.
Yes. So from a budget to actual in the 24-25 year, we generally paid right around what we said we were going to pay.
Okay.
That being said, the balance in the health insurance fund at the trust is lower. So we have no breathing room now to absorb losses year over year. So as those claims go up, we're paying the actual increase. Like, what was it, 16% for next year, Matt? I think. What was the number?
Around there, yeah. Next year's going to be significant.
So for 26-27, 16% on top of your health insurance number is a very big number.
Right.
So, we've been involved with some conversations with Dr. Vitale and just trying to find some ideas as to how to stabilize the costs, one, but then, reduce them because they're very large increases. So yes, we did see a large increase in the 25-26 year, and you'll be seeing a very large increase in 26-27.
And then the last
Jim's
question,
right. That
estate losses
sorry.
too. Are we gonna still see the real estate losses that we were seeing for revenue from delinquencies going forward? Or do you think that was more just an adjustment because we weren't budgeting enough?
I
So
think
here,
that
yeah,
Uh,
it was, so you were budgeting too much and it was coming in under. I think it's the opposite, right?
Okay, gotcha.
So I think we pinged it like the number was pinged at about 10 million delinquent, which was pre-COVID. And then
Mhm.
COVID happened and folks moved in, bought all the houses, paid all the back taxes. And then there was no more delinquent tax to collect because it was paid up. And then it fell off a shelf and it was sitting in that like $7 million range, I think. And so we've trued that up to the more recent trend, not the, $10 million trend. Yep.
right.
But
They
it,
left it at that level and then we were never getting to it. The last 3 years, we haven't even come close to the number. So we brought it back.
yeah.
So we were estimating more revenue than we were actually getting because,
Yes, that's correct. I may have said it the inverse the first time. And if I did, I apologize. But yes, that is correct. We were at 10 and it dropped to roughly
Yeah.
7, but there was a $1.7 million
Under
negative
budget.
variance under
Yes.
budget. Yeah.
We received $1.7 million less than we thought we would based on our budget, which is
Right.
why we brought that number back down because over the last 3 years, we saw it still being almost the same kind of number and we're never coming close to it. So we're showing revenue that we're going to be taking in, but it never comes in, right? So for the last 3 years, so we brought it back to where we believe it should be and that it's now consistent.
gotcha.
Can I ask a question? Where does the money from the inequity funds that we were supposed to receive last year but won't receive till this year? Is that fit in anywhere in?
Yeah, so what that is, what Jim was talking about, and Jim, you can jump in, but I think he's talking about the tax equity supplement, right? The 5
Yes.
million?
Yes.
Okay.
Yes.
So PDE, what you got, some schools got adequacy, some schools got tax equity supplement, okay? Or both. You guys got tax equity supplement, which amounted to $5.5 million. Okay. So in 24-25, you received the $5.5 million in cash, but you weren't able to utilize it. So you couldn't recognize the revenue. You had to defer it, which means, yes, I have the money, but I'm not allowed to use it yet. Okay. So we have to defer that on your books. So it's in the cash, it's in the bank account, but you're not allowed to touch it. The following year, you're allowed to use that 5.5, which Jim is talking about. And in your budget the following year, you have another 5.5 that's coming in that has to be deferred that you can't touch for the following year either. So it's a cycle. Like you got the 5.5, you can't use it till the next year. The next year you're going to get 10.5, but you only can use the 5.5. You got to use the 5.5 the next year. It's always going to be a lag. It's almost like a year lag, but you get the money up front.
So we
And
can
all
understand
it is,
Is that in our revenue from last year?
it
Or
is
no?
not.
This year.
No,
Okay,
It's going to
so,
be in this year.
it is in the 25-26.
okay, so
The
we got it, but we don't really
5.5.
have it on the books.
So the
But we're allowed to
Correct.
put interest on it?
The 5.5 is in this year's revenue.
And then next year,
11.1 is in next year's
next year we're
revenue.
gonna get double.
So in the 25-26 school year budget, they awarded us $11.1 million in tax equity.
Oh, we won't get that till
We
next.
have it in our bank earning interest, but we may not use it or show it until next school year.
And the
5.5 of it.
Year after that is another 5.5,
It'll be 16.
16 and a half. Yep. And then the way they're promising
yeah,
it,
knock
is
on-
it's going to be stacked like that for 8 years out.
So that should help our,
It should significantly,
Yeah.
we just need to get there.
Yeah.
yes.
Yes,
Yes.
and it's
Okay.
it's a strange way of doing it, right? They're giving you the cash and we have the cash, but it's
But we
not
can't touch
revenue. Yes, it is so strange, right? So it's hard to comprehend that,
So
right?
it's not
If you
hurting
look
us
at your,
budget wise either, though. It's not being affected in last year's,
This
so
year's
the
budget.
deficit doesn't show, the loss in last year doesn't show.
Has no
had nothing to
impact
do with
one
it.
way or the
has
other.
no impact.
So even though we're at a loss of
But it helps this year's
10.3.
budget. But it helps
10.3, we, okay, man.
That 5.5 is not in that number, if that's what you're asking. You have it, but it's not reflected there. If it was, that would be 5 million less.
Do you think that
But
money's
when
sitting
we
there?
did, hold on, Rebecca, when we did this year's budget, we included that 5.5 in the 25-26 school year budget because we knew it was revenue. So even though the state finalized their budget significantly late, we knew because they promised it last year and it's been sitting in our account, right? So like, we're not going to see, when you see this report next year, it's not going to be 5.5 additional revenue that we didn't anticipate. We
It's already-
anticipated that. Yep, it's already baked
So
into the
assuming
budget.
we're still gonna have that deficit,
There will still, it will not be as significant,
and
but
it's
there
gonna
will
be
be,
5.5 less than what it would be if we didn't have that money.
yes.
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 Okay.
But it will be on budget, probably to the penny, because even though it's the 1 year lag, it does allow for 1 year of budgetary planning on that one line item, right? So we know what we're putting in there for 26, 27 now. We know the
Because we
number.
have it, right?
So there will be no variance there,
Mhm.
but it will be
Good.
there.
Thank you.
So I guess my question was the revenue that we derived from it by interest, that 5.5 that we got in 24-25, that we were not allowed to use until this year, 25-26. Were we allowed to use the interest in our budget?
That's
from
part of
24,
that. That's part of that positive $2 million variance that I called out. Yes.
Okay.
Good question.
Oh, and the interest earned, 2 million, okay.
Right. So you had a positive variance because you had an extra 5.5 million that could collect on that interest, right?
So any questions about the 24-25 budget?
Nope.
Okay, do you wanna talk, we've talked a little bit about the 25-26. I think the only thing we didn't talk about is the cyber charter costs and the new 363 form.
Yeah. So there was some cyber charter reform working through the new PDE 363 form. We had hoped that they were going to come back with a little bit better reform, but we're grateful for what they did. We're now able to deduct 60% of our maintenance costs, like building maintenance costs, which is the 2600 function as you look at it on your board report. So we can deduct that. We can deduct student activities off there, so sports and things. We get to deduct 60% off of that. I believe, Joe, help me out here. It's 100% of regular ed cyber, I want to say.
Yes. Yes.
And there was tax collection costs you get to deduct as well.
2330, I think.
So it creates I'll say a modest savings, but it generally for most districts is rolling it back to about a year and a half ago. But we'll quantify that exactly for you with a fresh set of enrollment figures. So Maggie, can we put that request in with your team, and then we'll turn that around within a couple hours?
Consider it done. And that form, although the budget came out in November, that 363 form, which is the form that shows what tuition rates are for regular and special ed, for brick and mortar and cyber, just came out like last week. So
Yeah.
it's not like we're slow on this. PDE
Correct.
just released the form, so we don't have good calculations on that just yet.
Well, and the other thing with our clients, PASBO has a workshop coming out on this, and we just wanted to make sure we wanted to sit through the workshop and make sure we fully understood any nuances that, isn't in the text before we filed these forms for our districts.
I had a
Do we
question.
still have the same situation where the school districts are being charged by the charter schools different amounts, or is PDE toward, making it standardized now.
No, they did not standardize it. This is what that 363 form is.
It did,
And everything we're hearing from the state right now, when we talk to the P groups, which is like PASA, PSB, and PSCA, is the state legislator is saying, you got 2 years in a row of charter school reform, we're done, let's see where you land for the next few years. So they are not anticipating any lobbying or movement on charter school reform until they see where we're at, for whatever reason, but that's where we're at.
Next
so
election.
you take all we got and work it into our budget.
Yep.
So my question was, I don't know if this is, especially with what's, what PD or PIAA said about sports as well. So if there's charter school students that we pay their charter tuition and then they come back for sports, who covers the cost of those activities, whether it be band, sports,
Rebecca, that's
theater,
in
all those things that,
policy, and we charge them. So that's a policy that we adopted, oh God, maybe a year ago?
Yeah, well,
A little bit more than that, yes. So
Okay.
they are,
they're gonna pay for it.
basically, we're taking it out of what we're getting reimbursed for.
okay. Because I've just in the past have seen a few more than usual students that are in cyber charter participating in activities, and I just wondered how it was covered.
Yep.
They're more
we
than
charge
happy to
them.
have them there, but just
We
the
don't
cost-
charge the student, we charge the school.
Correct, yes.
Yep. I just wanted to make sure when we say we charge them, we're not charging the children and their families. we're
Nope,
charging
nope.
the-
Nope,
Yeah,
we're free of
We're
public
not giving the
education,
student much
so
money.
Correct, exactly.
Mhm.
Charging
Great question.
And Rebecca, I just got the answer to your question, what we budgeted for cyber charter in 25, 26. And that number is 11,050,000. So that significantly increased for the current year, but we think that's a lot closer to where we'll end up.
yeah. I'm glad we upped it back up because I know 2 years ago they dropped it back down. It was close to 10.5, and then I believe it was dropped down. So I'm glad we brought it back up. I guess it was wishful thinking that we were going to get a lot more back than we did a couple years ago. We never really did.
Well, all I could do is speak to our estimate, and we think we trued that up to, what actual enrollment looked like at the time of budget passage and the rates that we believed, before legislation was passed. So I guess my point is all else equal is you'll probably see, a modest savings in this category once we refile the form. So that is really what we hope to touch on in the 25, 26 budget. Kind of the next steps is, obviously your auditors are coming in to the board meeting to kind of walk through. They generally, don't go through these variances as we have. So we wanted to really emphasize this piece so you have good context on what happened in the year, because the auditors are coming more from a risk perspective and a compliance and, how to, what type of opinion they offer. And then obviously we want to monitor your 25, 26 current year progress. And we want to make some forecasts and make some assumptions on that and see how we think you're going to end up. Hopefully better than budget, right? And then obviously, and I mean, the development of 26, 27 budget is already underway. I know Matt's been really, working at that with his team. And so we'll play a role in that and, refining estimates and really trying to give you as an accurate as a budget as we can so that you can make the best possible decisions as a board. So that's our goal. And, obviously we're at your service if you have any questions on how that works, but we'll be actively working with the team going forward.
Now, the 25, 26 that we have now, you worked with the team to put this together, am I correct? He's worked with this on 25, 26.
Absolutely.
So,
And then-
yeah, and we do have
so now
some, is that the, Matt, is that the report that's organized, as we were talking
General
about?
fund, the general fund report, yeah.
Yes.
So, I mean, can we open that for discussion now? Because Matt and I were having a discussion.
Sure, that's fine. We can skip the committee charter and go to that. Go ahead.
Okay, I appreciate that. So, monitoring of expenses is very important, and this is something that we, every district we look at a certain format of report. And Matt was sharing with me the kind of the format that was discussed, I guess, at the last meeting, if I'm correct.
Yes.
And I think that's in front of you there. And I just had a little feedback for that discussion. I think what you have in front of you is object and then sub function. Okay. And that's just accounting jargon, right? But to us, the best way, and the way the rest of our districts that we worked with have it in a format that's the opposite of that. And just to kind of break it down in terms of chart of accounts, PDE has a very specific chart of accounts and it's a very specific order. It goes fund, function, object. And when you're trying to drill down into finding what variances are what and how to diagnose why a certain expense is like 20% over your expectation, you really want to look at it in that order, right? So when you let's say we're at a meeting and you want to say, hey, Matt, what's up with this particular variance? It's a lot easier for Matt to look at transportation salaries than it is to look at salaries transportation when we're kind of looking in the accounting system. And that may not make a lot of sense, but the system was designed to be fund, function, object, kind of not the inverse. So as somebody who day in and day out looks at variances and reports, and specifically this report, I would just recommend to consider that revision in the format to be sub function object, because it's just easier for you to find like what were the transportation costs. Otherwise you're looking at the object of salaries and the object of fuel, where you kind of want transportation lumped together and then figure out what went right or wrong in transportation rather than a more broad category. So just wanted to give some feedback on that for what it's worth. Just kind of what other districts are doing and how I find it as far as diagnosing budgetary issues.
What is the difference in what is the difference in the number of pages that would generate for us to look at?
You,
One
Is
is
there a way to
6 and one is
roll
like
up?
18.
Yeah.
So one was 6 and one was like
Yeah,
16, 17, 18.
So a lot of our districts have not sub function. They would have just like minor function. Like they would have it'd be like the 1000s instead of the 1200s and 1300s. So, but if so, that's usually what people like is the 1000s, which is instructional, and then look at 100, 200, 300, 400, which is salary, benefit, purchase services, supplies, and so on. So that's how most boards look at it. And then when they say, why are instructional supplies going crazy? Matt could pull a more detailed report and give you an answer. But if you want a more detailed report, certainly that is your prerogative. Just a little bit of feedback on when we need to diagnose these issues. It's a lot faster doing the inverse.
Yeah, Jim and I, we took a look at the version Jim's mentioning, and it's down to 7 pages for expenditures. We didn't put it on this month, but if there's an appetite, we can do that for next month. So you have that one, and we can look at it that way that Jim's talking about.
Let's put both on for next
Yep.
month so they can compare it, so they can actually like visualize what's different. Is
That's
that
a great
okay, Matt?
idea.
Excuse me.
God
Bless
bless
you.
you.
Thank you.
Bless you.
Okay, now that we're looking at the general fund account and the board summary, what are our questions?
General, which was that?
That's the one you have in your hand.
Oh, this one?
Yeah,
I actually thought we were did pretty good on it. We're about a third of the way through the year, we're about a third of the way through.
I mean, the
That's the
26th is
November
halfway
one.
through the school year. I mean, the 26th, we're 50% done, it's the change of our semester.
People pay bills, come through the summer too, right?
Everything ends June 30th. It should. Yeah,
So we're over a couple of things and we're under another, that I just,
This is as of November 30th, though, correct?
Right.
Yes. So it's
Correct.
it's not December, so we're probably more than 33% right now, just because we've gone a month and 2 weeks into.
Right,
yeah, but this report is for about a third of the way. through.
yeah, that's accurate.
We should be
Yep,
about
absolutely.
50% through the budget.
And remember, your teachers are just starting their salary year in September through August. So they're not starting back in July.
Mhm.
But, you know, the,
Do you find this report helpful?
yes,
Okay, any questions or?
I also think the idea of doing like, say, transportation and then doing each
Okay.
one is what showing it all that.
Yeah, let's look
Let's
at
look
both
at it, but
types of
it,
reports.
it
next
sounds
week.
like a
Yep.
smart way of doing it.
Okay, anything else about the general fund board summary? The committee charter, I know we had talked about that. Rebecca, did you work on that?
I started it, but I figured I would wait till we were in person to do it, so I could actually hand it out rather than share a screen, if that's okay, because I'm tech challenged.
That's fantastic.
Okay.
Okay, anything else for our school business consultants before I get into the Power Ad partnership? So as you know, so Jim and Joe, thank you so much. We appreciate your time. You are more than welcome to hang out with us for a little bit if you want, but you do not have to. All right, so as you know, the board invested a significant amount of money in digital scoreboards.
Yes.
At both the North and South Stadium. The scoreboards offer us an opportunity for advertising. Both static advertising on the bottom and then digital advertising on the side of the boards during the game. I met with Daxtronics, which is the company that sold us the boards.
That's what it was.
They worked up a great presentation for us, and I started to call around to our community. And I spent more hours than I'd like to admit in a very humbling process of not getting any sponsorships. No
Right.
one would entertain it. Most people,
Ditech, didn't say they would help on that part of it.
who?
The manufacturer of the school board, they didn't say they would help.
They did.
Well,
They didn't
they-
solicit, George. They didn't solicit people. They
Oh,
They
helped
didn't
her.
solicit, they built the slide deck, they built the presentation, they helped me with the pitch, but then the pitch is me. The pitch is somebody from our district doing it.
When they came in originally and talked to us, I thought they were when they talked to, that they were gonna help us also get the, sponsors. That's why I asked you the question.
Yeah, they,
Because when I read this, I said, why are we doing that? Because it was whatever the manufacturer was, so that they would help us on this.
They helped us.
They did, they did help us, they did. But the ultimate pitch is East Stroudsburg Area School District going and trying to get it. They've received their payment already. So they helped us with the slide deck, they helped us talking about the pitch, they walked us through, they gave us numbers of what we should sell it for, of how we should bundle it and how we should package it. And then said, have fun, tell us how we can help.
That part, that have fun is the part I get, because my understanding when they were here trying to sell some signs. Was.
They were gonna go out and
that
help
They were
solicit
gonna
the
do
ads.
exactly what,
Correct.
this other company's doing.
So where we're at is we can have your superintendent continue to be a marketing person and try. I can't even get meetings with people and
I
like,
wouldn't expect you, though. That's what I expected.
I actually, it was humbling because I expected people to at least take my call. And they didn't. So we put out an RFI. Right? So a request for information for companies that could help us solicit. So companies that are marketing companies that could partner with us. And, well, we received one. And this is the one that we received, and it's Power Ads. And typically what Power Ad does is they do the start to finish of what Daxtronics said they would do. But they they do it backwards. So let's just say, and I'm not suggesting this, so don't get the idea in your head. Let's say we wanted to get digital scoreboards for our gymnasiums. Power Ads would say, great, the scoreboard is $10. We're going to put the scoreboard up. We're going to market and solicit it. Once we get $10 in marketing, then we will split the sponsorship money. So they pay for it. You don't lay out the money. They do it. We're bringing Power Ad on after the signs are already installed. So they now have to sell the space that is there. So what they have basically they've written up their proposal of how they would share the profits with us, because we don't have to recoup the money for the signs. We've already paid for the signs, which is awesome. Now it's just straight, we're gonna split what the profits are. So I'm not asking for us to move on at this meeting, but I wanna have a conversation if we have an appetite to partner with a company to start to solicit outside companies for long-term sponsorships on these signs.
Yeah, let's
My question is this, do they think that there's an
Finish what it's saying.
appetite for outside companies to actually buy our advertising? If you couldn't do it and get the phone with yourself putting out there, being a local person, what makes us think that an outside company has the, I don't know, the connections to get something that us local people don't have?
I don't disagree with you. I thought that as well. However, this is their company, right? Like literally, this is what they do. So let's say, and I don't want to start naming companies, but let's think of a big marketing company or a big
Just say
company.
St. Luke's, because we already get money from St. Luke's.
No, I'm thinking like national brands. Let's say like
Home
McDonald's.
Depot.
Home Depot, let's say Home Depot. Maybe Power Ad already has a connection with Home Depot and is selling their space in 35 other schools. So they already have those ins with the higher executives, not just local companies. So I
Gotcha.
was calling our local big companies. They can do more of a national company and do more of a national brand. But also still do some local companies. What's good about this, and the only thing I really like about this, because I don't want to lose money by giving them a piece of it. However, there's nothing to lose. The boards are blank. We're receiving $0 right now. If Power Ad can't get in anywhere, we're still receiving $0 and we paid them nothing.
Are we locked
Okay.
into letting them do all our ads? I mean, so give you an example, if a local business comes and says, hey, I wanna sponsor your board. Cause you do a lot of business with me. Can we do that directly if they come to us directly, or does that have to funnel through Power Ads? I couldn't find that anywhere.
So that's a great question. I will have Chris Brown comb through it.
You know, I mean, I'm giving an example. I'm not saying ESSA, I look at like ESU's board. It's mostly local big businesses
Yes.
that we deal, like ESSA, we
Yes.
deal with them as a big
Correct.
account of ours.
I asked.
But see, when you asked, they were in that transition of ESSA, CNBC, did you ask since they
Yes.
changed over?
No, I asked, I don't know, Matt, what was it, a month ago, 2 months ago?
Yeah, they're having discussions. I think they meet every so often. So we put the idea in their head, and I think they're gonna.
Well, they were also in the transition of their restructuring, so that was probably not on their top of their mind, I don't think.
No, and there was a lot of transition work, so I imagine.
I just use them as a reference.
Yeah.
Not only, you know.
Correct, and what Power Ad also suggested is that you only do one. So if you do one local bank, that you're not going to Wayne Bank and ESA, you're doing one. I don't.
St. Luke's or.
St. Luke's
Lehigh.
and Lehigh Valley Health Network, same thing, that you would choose that. But I just wanted to see, because I know we had spoken about it, we put out the RFI. This was the only company that came to us, and we called companies that do marketing, and they said they're not interested in this because we only got one. So we're like, maybe people don't know this is out there. So,
Well, the sign company knew it was out there. Cause I said that's what they sold.
correct.
One of the things they sold to us, well, as a board on was that they would.
George, if I
Well,
remember
we don't
correctly, there were
advertise.
multiple packages for that, and I wonder which one we chose. Because there were multiple packages that they suggested, and I don't remember which one we chose when we did the signs. I don't know if you remember.
I don't remember off the top of my head now. But I know that, we sat with Pete and all, and talked to him and all.
Mhm.
And the
Uh,
athletic trainers, I mean, the athletic directors
And
came
they
to the
were
meeting
supposed
and
to-
everything too.
Now, and they're supposed to train us, are they training other people?
So, yeah. So,
Yeah, that has already happened.
Yeah, okay, good.
Yeah.
so
That happened
basically
over
with power,
the summer.
with power ads, if we wanted, if we would have done it the way we could have done with them, they would have paid to put the scoreboards in our stadium and then would have supplied the ads to recoup it, so to say,
So they would have
They
been
would've-
very vested
in putting ads on that board.
at, yes.
Cause they're riding the $400,000 per, $500,000 per board.
Yeah, but if.
325.
Yeah, well,
Yeah,
four,
if we had not,
Now.
if we had not purchased some ourselves,
Correct,
but,
yes.
yeah. That's where over the
and
day.
then they have the lifetime rights to sell our ads on that board as long as they.
Once they recoup it, then it's a wash. And I think then you can renegotiate where you're at.
But it's
They just want their money back, yeah.
It's in your agreement though, right?
It's gonna take a few years to get that money back
Mhm.
on their part.
And we have all sorts of other things going on with the school district.
Correct.
So
So
we're in
one
flux too.
question I have in regards to that, and it kind of piggybacks off yours, Keith.
Mhm.
So for example, they're only going to do ads for the board. So if a play was doing ads in their playbook from local business, completely separate, and they,
Correct, completely separate. Yep,
They're not becoming our advertising agency.
No,
Okay,
this is
it's
just-
strictly for the board.
just the two boards.
So if we ever want, like, in our policy for ads, we
Correct.
also had
We
a
would need to
thing.
update our policy.
Okay, but we also had something for like signs, like some schools have signs on the top of their stadium
Correct.
for more local
Or
Yeah.
businesses that are not as expensive. We can
Exactly.
still do that ourselves if
Correct.
we chose to,
Correct.
without them being
Yeah.
infringing on
If
it.
you're doing an activity and you're
Or the
doing,
program in the
Jump
stadium.
Rope for Hartford, and you put all the names of the companies on the back of the t-shirt, that is
They're
not
not,
power ad.
okay,
This is
they're
just
strictly
the
for the.
two
And then-
digital scoreboards.
and
Yep,
then my
so when
other
you-
question is, if we decide ever down the line, maybe 5 years from now, 3 years from now, we want to do the scoreboards inside where basketball and volleyball play and all of our
Yes.
indoor sports, we can partner. We don't have to go to Dextron because they did our outdoor boards. If we find that in 3 to 5 years, Power Ad's doing a great job with our billboard, our advertisement outside, we can then approach them maybe to say, hey, they'll give us the boards inside and then
Yes.
just maybe increase the percentage that they take from our advertisement inside and outside.
correct. Yep,
Something to look at.
so
Just
as we finish up our budget, I'm trying to find areas to connect revenue with expenditures. So this to me is a way to bring in some revenue with very little energy on our part. Somebody is doing the work, they're getting a percentage of it. But right now, and I can tell you, every game I go to, anybody who sits next to me will hear me mumble about the white space on the boards. Like, it's still blank. Cause it's missing and lost money.
Yeah, it is, but there's.
one other question, sorry. So at
Yeah.
graduation, because this was one of my hopes for graduation when we had it this past year, but we had it inside rather than outside, that parents could do shout outs on the board during graduation if it's outside. If we did do that, would Power Ad get a percentage of that as well? Or
No,
would that be something that we did?
no, that would be a school function, not at all.
Well, that was.
Yeah, that's
Football-
not commercial.
function
I'd say
too, that's why I'm
personally,
asking.
Yeah, it's not commercial advertising.
Okay. I just want to make sure that if we decide to do that, because that was like, I was so excited to actually have that at graduation this year for the kids. parents can do shout outs or baby picture, or like do a baby picture day, and parents would submit the baby picture for $1 and the baby picture would be up or something like that,
If I was a student, I'd kill my parents.
They do it at my son's college graduation. I'm so excited for it.
The problem with that is, what if it rains?
Right.
So I didn't know that was a plan or intention of the
No,
board.
it was just an idea of mine.
Oh, okay, good. All right, anything else about power outs?
When you graduated, did you have it outside?
When I graduated high school?
Yeah, high school, wasn't yours?
Yes.
It was always
That's
outside.
what I'm saying, so, I would think we would wanna try to do it, what Rebecca was saying on that, but.
Right, but when family members have flown in
Yeah.
and you're expecting 3 straight days of rain,
Well, I understand, but
I can't guarantee an outdoor ceremony.
speak to,
What?
this will be Ted.
Okay, anything else for the good of the group about power ads?
No,
So
we
I will
moved to open
send this,
parachute.
if we're, hold on a second, if we're okay with it, I will send this contract over to Chris Brown for his review. With your questions as well, and then I will have it back on the finance committee in February for board approval, for you to move it to the board and then board consideration in February. Does that work?
it's strictly for commercial.
Commercial, yep.
Yeah.
Okay, perfect. All right,
Next on the
Rebecca,
agenda to
it's all
move
you.
forward is this open parachute subscription, which we will probably hear about next week from education programs and resources. So we're a little bit forwards, backwards, but
well, there is no EPR committee next week.
right.
So open parachute, you heard about this. One of my first meetings, so October, November of 2024. This is a social emotional learning platform that was purchased under pupil services. It was a 3-year agreement that the board approved. This is just the 2nd year of the agreement.
Are we happy with it? Just out of curiosity.
That's,
We have a 3-year commitment of a signed agreement with them.
Okay. I will take that as that.
256,000 a year?
For open parachute?
Yeah.
It's $256,000?
It's
For the year?
14,000.
I'm sorry, looking at grade one. I'm
Right,
sorry,
I was like,
wrong,
oh.
I'm sorry, wrong one. That's why I thought it was a little expensive, but I'm looking at the wrong one. Sorry.
we wanted.
14, I was looking at, I'm still looking next save down. Sorry.
No, Intriga
right.
1 is our next item on the agenda, which is
Yeah,
our
I'm
network
open.
switch upgrades. We've been doing this, if I'm not mistaken, Dr. Vitale, you can correct me if I'm wrong. But over the course of the last year, we've been upgrading our network, and this is just another part of it.
So I am definitely not smart enough to speak about this. So Mr. Borash?
Yes, that is correct. This is phase 2 of the high school switches. We did half of the high schools this year. We'll do the second half next year, and then subsequent years we'll do the intermediate schools and the elementaries. We'll be applying for federal E-rate funding, and if you look at the backup, our share, should we be successful, which we have been to date, would be $38,437 would be the district share, and the federal E-rate program will pay for $217,811.
Mhm.
Okay,
We wanna go with that one.
I want that one.
Thank you, Brian.
They were trying to cut the E-rate program, weren't they? That was like on the chopping block for a while.
They removed, they added Wi-Fi for buses for about 2 years, and then they removed it recently. For this fiscal year, they removed.
And I just think
Wi-Fi.
the whole E-rate program itself, it went to the Supreme Court, didn't it?
It did about a year ago, but it was found to be everything was upheld with what it was.
Okay, good.
Exception 1998.
That's awesome. Okay. Thank you.
Any other questions in regards to Intriga 1? So the price tag of $256,000, as long as we get the E-rate grant, will be substantially, the cost to us will be substantially less, approximately $38,000, if I heard Mr. Borash correctly.
Correct.
All right. Our next item on the agenda, we have this every year around this time, and this is our Act 1 resolution stating that the district resolves not to raise taxes above the Act 1 index. And our Act 1 index for our school district is 5%. So what this states is we could raise taxes, we may not raise taxes, but if we do raise them, we can't raise them above 5%.
And we must have this in order to keep receiving the tax equity. So,
That 5.5 million.
Yep. correct, we do not receive the tax equity
We don't.
if we do not have this, and if we attempt to raise taxes over the index, correct?
So this is a no-brainer.
Yep, it should be,
And we do it every year.
yep,
Just a formality.
correct.
Yep. Any questions in regards to that?
Nope.
No,
Our next item on the agenda are our CHA invoices from properties and facilities. We have the boiler heater for JTL 498.40, the boardroom AV upgrades 505.48.
Rebecca, if I
And
could
it was
call,
modified to 325.48. It was inaccurate. And then we have the North Site Transport Building 781.25. Another bill for JTL boiler. The first one was December. This one's November. 996.80. 317.67. The this JTL data networking. And the other one is the ESE sprinkler replacement, the November bill of $2,751.70. Any questions?
And kudos to Matt Kraus, because Matt is going through each individual invoice and reviewing each one to the penny. So that is why the second one for the boardroom AV upgrades is a modified invoice, because we
Which one?
believe that the CHA invoice is inaccurate. So we have modified it to $325.48 from $505.48.
Matt, why was there, I thought these bills are a split equal payment from month to month. Why did the boiler at JTL change almost double from one month to the other? Oh, it went down.
Yes.
But why did we have it? Why was it higher on one versus the other though?
these are the CHA invoices, so it depends on what they are doing that month in terms of their engagement level. This isn't for the actual work done. This is for the just CHA.
But I thought we get billed by them like so much over a 12-month period broken down. I thought they would all be equal, shouldn't they? Or no, they're not.
I believe it also varies based on what they're doing in that specific time frame for us.
Of where they put their energy, correct?
Okay. I'm just confused. I thought we pay them a retainer fee and then these extra fees were like split over the project. But I guess
no,
it changes.
they do it based on the amount that the contractor
Okay.
bills.
They
bills
vary.
less than-
Mhm.
It's the amount of hours they put into the project. So that, yeah,
Right.
I think you're right. There is a base fee, but then these are if they did engineering work on a project and it spent 18 hours on it, they bill it to us.
That's one of the questions we've had all along, is that retainer fee of $2,000.
I mean, one of the things that puzzles me is the 2751.70 for ESC sprinkler that we don't even have a reality what we're doing with it yet. Correct? The ESC, I mean,
No, we have a full scope.
We're working on
oh,
that.
we starting it. We're working on it already?
We're,
It's already
it will be this summer, but yeah.
Okay, but we didn't start the project yet. Oh, but they're still doing all the
There's a
scope.
lot of-
Okay.
Yeah,
Well,
exactly
okay.
what the plan is.
Okay.
Yeah.
I just,
And why we got, have we heard anything on the bus garage?
This is not the property and facilities committee.
I know, I'm just asking.
No, not yet.
next.
Next on the agenda is our train bill for 127,924.77, which is part of the Bushkill Elementary boiler replacement.
And every time we talk about them, I'm just gonna kudos that we decided in the end of the summer to put a new boiler in. And that boiler was set up on property
Mhm.
and fired up by the second Monday in October.
Yep.
You mean on schedule? Ahead of
It
schedule.
Early.
feels like a schedule.
Early, I know, I'm saying like that's, okay, I'm
We had-
being
we had it
sarcastic, I'm
going,
sorry.
so.
So good,
No,
so good. Kudos to train.
And then our next item on the agenda is the Keystone Fire and Safety. We have the boardroom engineering project maintenance 2,206.16 and the boardroom AV material 5,194.40, and then the Keystone fire and safety invoices that are present here. Any questions?
No.
And then we have our capital project summary for January. If we take a look, I love this new format. I can see it so much better. So thank you, Matt.
You're welcome. And just remember, this always includes everything up to what you approved last month. So I'm not assuming you're going to approve everything just in case. So it's everything through December that has been paid.
And it looks like we're almost done with a couple of projects finally. I see the one is at 95%, which is the North Natatorium roof replacement. I will be very happy when that is off. And the Bushkill boiler is just about done. We're at 90% there. And the JTL data network replacement's at 97%. And we have a couple in the 80s also. If you look, we have the North Stormwater Phase 3 is at 87%. Is there going to be a Phase 4 also?
Mm-hmm.
And a 5
Yes.
Okay.
They have to. I didn't say it out loud. CHA has to come back to us with, if you remember,
That's what.
they gave us a whole map of the North Campus, and we said, you need to break that into, because we are not going to pave the entire North Campus around the high school in Lehman, so they should be breaking that up for us. And when I have my pre-PNF meeting with them, that will be a conversation. Yep.
Okay. And then the other thing that's pretty close to being paid for is the South Field House equipment replacement. We're almost done with that too. And then there's a couple that are, at zero, but I guess they're going to be started soon because they just got approved last month. So, any questions in regards to this?
Nope.
Okay, let me go back to my agenda. And it looks like, let me just bring my screen back up bigger so I can see. Do we have some participants? So if anybody from the public would like to make comments on any of the items that we spoke about on today's agenda, please raise your hand and we will call upon you.
I do not see any hands raised.
Okay, well, thank you for the public for attending. We're always happy to have people present with us. Let me pull back up the agenda so I can see what's next. All right. It is time for us to move forward our recommendations. So let's go back to the beginning. We are going to obviously bring our consultants as well as Axelrod, because I'm not going to try to say the first other name, back to our board meeting to do the presentation of our audit. That's a given. And we have the power ad we are not bringing forward to the board. We are bringing forward to Chris Brown to review the contract, and we will again see it at finance. So I don't need to make a motion for that. However, we're going to make a motion for the other items, which are A through G. So we'll vote on them all together. I will read them and then we'll make a motion and then approve them. So first we have open parachute subscription, our second year into the contract for January through June 2026 for $14,000. Integra 1, $256,249, the Cisco switch upgrade for our high schools. And once we put in for the grants, it'll be approximately $38,000. We have the Act 1 resolution that we will not exceed the amount of 5% for a tax increase if we should decide to increase taxes. We have our CHA invoices. We have our applications for payment, our Keystone Fire and Safety applications for payment, as well as a few mixed in there. And then we have just an overview of our capital payments for December 2025. Do I have a motion and a second to move these forward to the board?
Motion.
Second.
All in favor?
I just want to comment real quick. I just have a question. How many days a week during the school year is the boardroom used other than board meetings?
It's a great question. 3?
At least.
Three.
At least 3, if not
Well,
more.
doesn't, is it done in there?
Right. My
So
point-
we-
I guess
Go
my
ahead.
point is, it's used frequently, not just by the board, but by students, by organizations, by groups in the district.
Yeah, so students and different student groups use it throughout the day. We use it for trainings and meetings throughout the day.
See,
I would say, and I'm not gonna put Patricia on the spot, however, Patricia would agree that scheduling, it's called the boardroom, because that's the space. But it really is used, I would say, in a 12-hour period, multiple days a week. And Patricia
Right.
runs it and schedules it, yes.
Well, the
Right, so-
original design, that wall could come in before the
Correct.
table, so,
Right.
and become 2 conference rooms.
Thank you, Rich.
Right. Yes, thank you.
So your point, Rich, is it's used an awful lot more than just a boardroom. That's the point you're trying
Right,
to make.
and that's my
Which
point, is that we're investing some money in there, but it is used heavily, and it's not just only for board
Not just
use.
for meetings once a month or 4 times
Correct.
a month.
Correct.
Yes.
Agreed.
Thank you.
Good point.
All right, so
So all in favor of moving these items forward with the clarification
Aye.
from Rich?
aye.
All right. Our next meeting will be in the admin building at 5:30 on February 9th, and also, of course, via Zoom and YouTube, should you choose to watch virtually. And then last but not least, do we have a motion to adjourn?
Motion.
Second.
All in favor? Aye, very good.
Aye.
With that being said,
thank you.
everybody for
you.
cooperating with us as we have our meeting flashback to COVID and virtual. So thank you.
Thank you, Rebecca.
Thank you.
Thank you, everybody.
All right.
Have a good evening.
Thank
You
you.
too.